Hi class, this is your instructor, and today we're going to go over some of the highlights out of Chapter 1 in the Small Business Accounting textbook. And it starts with just the simple definition of accounting, which is the process by which financial information about a business is recorded, classified, summarized, interpreted, and communicated to owners, managers, and other interested parties. Now, I've got this study guide in a PDF format. If you want to print it and follow along and fill in the blanks as we go, you can, or you can just listen. Either way works. Accounting is often called the language of business because it's used to communicate financial information, and people all over the world understand financial information. Businesses use an accounting system to accumulate data about their financial affairs, classify that data in a meaningful way, and then summarize it in reports that are called financial statements. And if you work in an accounting department, the goal every month is to produce the financial statements that you can give to the management team who use those to make decisions. This chapter also talked about some accounting careers that you might be interested in. One of them is called an accounting clerk. This person is responsible for record keeping for a part of the accounting system. You might be the payroll accounting clerk, the accounts receivable accounting clerk, or accounts payable accounting clerk. Basically, people who are the accounts receivable clerks deal with the money that comes into the business, and the accounts payable clerks deal with the money that goes out of the business. They pay the bills for the company. This usually requires 1 or 2 accounting courses and little or no experience. Another occupation would be a bookkeeper. This person is responsible for recording business transactions and may supervise the work of the accounting clerks. It usually requires 1 or 2 years of accounting education and experience as an accounting clerk. Another route you may choose, which requires a little more education, is the accountant. This person usually supervises the bookkeepers and prepares the financial statements and reports that we ultimately give to management. This usually requires a bachelor's degree or sometimes a 2-year college degree with bookkeeping experience. But I would say most jobs that are advertised in the newspaper where they're looking for an accountant, they want somebody who has a bachelor's degree in accounting. All right, if you decide to become an accountant, you can choose to practice in one of 3 areas. The first one we talk about is public accountants. This person works for public accounting firms who provide accounting services for other companies. Public accountants provide auditing, tax accounting, or management advisory services. And there's 4 big public accounting firms that you hear about sometimes. Deloitte & Touche, Ernst & Young, KPMG, and PricewaterhouseCoopers. All right. So if you want to be a public accountant, you have to become certified. And to do that, you want to earn your CPA credential. To become a CPA, a certified public accountant, where you can do accounting for other businesses or for individuals, you have to have a certain number of college credits in accounting courses. You have to demonstrate good personal character. You have to pass the uniform CPA exam. And you have to fulfill the state experience requirements. You have to work in an accounting office for a couple years before you can become a certified public accountant. All right. Another area would be a managerial accountant. This person works for a single business and performs a wide range of duties. So you might be the accountant for any of the local businesses. You'll work for a company as a private accountant. Anyway, the duties they perform, they'll establish accounting policies, They'll manage, they'll prepare financial statements, they'll help interpret financial statements for the management team, they advise the management team, they prepare tax forms and other reports for management. So you'll work just for one company. A third option would be a governmental accountant, or a not-for-profit accountant. This person keeps financial records and prepares reports for government agencies. Sometimes they're hired to audit or verify other companies' books for other governmental agencies. No profits are earned by governmental agencies, but you could be an accountant for one of the not-for-profit, maybe a city of Hutchinson, a church, something of that sort, a school district. All right, then in the next section, they talk about users of financial information. Just pretty much everybody can use financial information from one time or another, but it mentions that owners and managers of companies, it helps them to make decisions about what prices to charge on their products, the product lines that they want to carry, advertising costs, and it just helps companies safeguard against fraud. Suppliers, they want to know if a business can afford to pay them. So if you order merchandise from another company to sell in your store and charge it, sometimes people want to see your financial records to see if you're good for the money. Banks, they want to know if you qualify for a loan. Taxing authorities, the IRS, say no more. We have to report every year how much we make. They're interested in our financial information. Regulatory agencies and investors are interested. Some industries are regulated by government agencies, and in our textbooks they mention a couple. The FCC, the Federal Communication Commission, they oversee radio and TV stations, and then the SEC, the Securities and Exchange Commission, oversees publicly owned companies, and they're designed to protect the investors who invest in publicly traded companies. That stock can be purchased in the stock market. All right, customers might be interested in financial information. If I'm getting ready to buy an expensive item, I might want to know if that company is financially sound before I buy, because if in 3 years something breaks and I need a part or I need some service, I want to make sure they're going to still be in business. Employees and unions are interested in financial information. If you work for a company, generally you want to make sure that you're doing well enough that you're going to be getting your next paycheck. So pretty much everybody uses financial information. Another thing the chapter talked about were the different types of business entities. An entity has its own separate identity. It may be an individual, a business, a university, or a town. It's important to keep the records of each entity separate. And they have this thing in business that's called the separate entity assumption. It's a business concept where the firm's financial records are separate from the owner's personal financial records. So if I start a lawn mowing business, I'm supposed to keep my own personal records separate from my lawn mowing business records. Okay. And then in our textbook, they talk about 3 of the major forms of business. And there are a few offshoots of those in the last few years that you might look up on your own. But the 3 major forms of business entities are, the first one is sole proprietorship. This is a business that's owned by one person, and the owner is responsible for the debts and the taxes of the business. So at income tax time, the owner's income and the income of the business are combined to compute the total tax responsibility of the owner. Okay, so that's a sole proprietorship. It's pretty easy to get started. You just buy the equipment you need, get your customers, and start going, start working. And then when tax time rolls around, you compute your own personal income taxes, the business income or loss, and you combine that to send in the amount of money that you owe. Okay, a partnership. This is owned by two or more people. It's a common structure in business that offers professional services. So you often see lawyers' offices, they're formed by partnership, dentist offices, accounting firms. Sometimes they're set up as a partnership. This is owned by two or more people. It's a common structure um, in businesses that offer professional service. A contract will detail all the rights, the obligations, and the limitations of each partner. So the contract tells, what everybody's responsible for and makes it very clear. When a partner leaves the partnership, uh, gets dissolved, and a new partnership is created with the remaining partners. Partners are individually and as a group responsible for the debts and the taxes of the partnership. So if you're going to go into partnership with somebody, you want to make sure that there's somebody with good character, because if you're each supposed to pay 50% of taxes and one person decides, hey, I'm not going to pay that, the other partner technically is responsible, because it says partners are individually and as a group responsible. All right, the third type of business entity is called a corporation, and that is a business entity that is separate from its owners. A corporation has a legal right to own property and do business in its own name. Stock is issued to the owners. Privately or closely held stock is limited to specific individuals. You may have a family business that is incorporated, but the stock is privately or closely held because only members of that family may own the stock. Publicly owned stock is bought and sold on stock exchanges or over-the-counter markets. A corporation has an indefinite life and does not end when the ownership changes. Stockholders are not personally responsible for the debts and the taxes of the corporation. So, say you have a lawn service business. If you decide you want to incorporate the business, you would go to the Secretary of State's website and find the place where you want to apply as a new corporation. You would tell them what name you want your business to be run by, and if nobody else in the state has that name, you can have it. And you'll pay a fee to get set up. You'll have to tell who the president, vice president, and treasurer of the corporation are going to be, and you can get started. When you incorporate, though, it protects you from some liability. If you notice here, it says stockholders are not personally responsible for the debts and the taxes of the corporation. So if the business doesn't pay their bills, they can't come back. Somebody can't come back and put a lien on your personal property and take your personal stuff. All right. Generally accepted accounting principles, which we call GAAP. These are just principles or rules that are determined by the accounting profession, which determine proper accounting standards. GAAP are developed by the FASB, which stands for Financial Accounting Standards Board. It has 5 full-time members, and these 5 members develop the rules that we're all going to play by when it comes to accounting. Most accounting principles are not laws, but they're just rules that we all play by. And then the book mentioned the SEC. Securities and Exchange Commission has the final say on financial reporting of public companies, but has delegated the job to determine good practices to the accounting profession, to those 5 individuals, the FASB. They make the rules, and we all abide by them. The SEC oversees the financial reports of the companies that are publicly traded on the stock exchanges. All right, so those were the highlights from Chapter 1. I added one more page here, which I thought might be fun for you to just do some Googling and find out, if you were going to start your own business, what would be the advantages and the disadvantages of each of these different types of business entities. And you'll see here that in addition to sole proprietorship, partnership, and corporation, I've got a couple others, actually 3 others listed. There's a couple called limited liability partnership, a limited liability company, and an S Corp, S corporation. So you might just Google that and see what you can find as far as if you're going to start your own business, what would be the type of business that you would want to start. Maybe jot down a few advantages and disadvantages to each type. All right, those were the highlights out of Chapter 1. And we're just getting started, so enjoy.